What a great day to be talking to Greg Foss. And it's really interesting, Greg, the last couple of days with everything melting, Forex in disorder, S&P's risk off, Bitcoin up until late yesterday seemed to be holding up pretty well. And I know that's your bailiwick, that's your wheelhouse, so we'll get to it. But first of all, welcome to TradeGate Hub and our community. And we're sponsored by TradeView Markets, and you're up in Canada, right?
Yes, sir. Yeah, thanks for having me. I am in Canada. Now, I got to be careful here. I believe Bitcoin to be the best asymmetric trade opportunity I've ever seen in 35 years, but I'm not all in Bitcoin, okay? I'm a credit guy. I start everything with credit, and this is what I want to point out, that I'm a credit trader, a 35-year credit trader. So, make sure that your listeners understand that Bitcoin is a small part of my portfolio that I think of as insurance against the fiat system. But that being said, there's lots of other tools I have in my toolbox. So I'd be interested in talking about more than just Bitcoin, obviously, if you want, but let's do what you want to do.
Okay, so you gave us a little bit. I was going to ask you about your journey, and I did read about you that, you've been involved in bond markets for quite some time. Have you here on the team. So, I've been around for a while. I think both of us, our gray hair speaks to that. And then when people listen to us, that's their verification. So I wanted to ask you, everyone's making such a fuss over the bear market in equities, and really not talking about the crash and things like, for example, here's the 10-year.
Yeah,
that's coming off a little bit. But, if you look at bonds long term, and
let's lay out some numbers. So the US 10-year, the US aggregate bond index is down 22%.
There you go.
Year to date.
So,
okay.
All right. Here's TLT. I use that
so
as a
proxy. TLT is the long one. So it's bouncing off of it. It closed yesterday just over, or just right around 101. It's bounced up to 102 because of what just happened with the Bank of England. So
exactly.
I'm sure
disorder.
Yeah.
Go ahead.
But let's talk about why I think, first of all, so what you kindly just showed is a learning portal that I'm involved in. It's a nonprofit organization teaching the world about basically everything you don't learn in school about how the fiat system works, okay? And it's as simple as this. I'm involved with 6 different people based around the world. The Keynesian economic system taught generally in schools around the world will never tell you how the fiat system actually works in truth, because if they did, a lot of people would question the sustainability of the fiat system. And it's as simple as this. It starts with commercial banking, which is generally levered 25 times to its risk-absorbing capital base. So
fractional banking system.
It is, but it's even bigger than that. It revolves around things like how much equity capital they have to hold, regulatory equity capital they have to hold against their loan books and their risk assets. But let me, if I may, start my history. So that's a nonprofit organization I'm involved with, but it's really run by 2 younger kids, one based in Australia and one based in Whistler, British Columbia, Canada. And I have all the faith in the world that they're doing some amazing stuff. And it's actually been translated into a number of different languages, being used in school systems in Central America, for example. And it's all free, and it's something I'm quite proud of in terms of trying to educate the world about how the financial markets really work. And it's my opinion that the financial markets are misunderstood from a credit perspective. And that's unfortunate because credit runs the world, okay? In the context of how big different markets are, credit is about 400 trillion US dollars compared to equities, global equities, which are just over 100 trillion. Okay.
And so the FX market even being larger than all the bond markets put together.
How big do you see the FX markets? Because all I know is that the FX markets trade about 10 times the size of global trade. So there's certainly a lot of speculation that takes place in foreign exchange markets, but how much of it is really necessary for global trade or not is something that you can argue. But at the end of the day, let's just start with credit, okay? Credit itself is a prior claim in the capital structure over any equity. So in the case of a corporate bond, for example, and that's where I spent my years in the junk bond market, if the bond is not worth 100 cents on the dollar, the equity is worth zero. And the funny thing is, most equity guys that play in companies that are junk bond rated have no idea where the bonds trade, which is actually ridiculous, because why would you go into a subordinate claim in a company if you had no idea how the senior claim, the bonds, were pricing the risk of that company? But you have lots and lots of examples of that, including some of the latest ones, Bed Bath and Beyond, and that little dumpster fire.
Okay, well, here you go. Here's the liquid, the corporate
LQD. So that's investment grade. So
right.
High yield is HYG.
Got
if you wanted to look at it.
There it is.
But HYG. But again, this is the global universe. The names that make up this index, they're S&P 500 components, some of them. But the funny thing is, the people that buy the equities, again, don't know what the bonds are foretelling for the equity. And in the case of companies' bonds trading at 60 cents on the dollar, the bond market is telling you that those assets are going to be impaired. And yet you get blind equity guys going in there saying, oh, the stock's got to be cheap. Well, the stock's not cheap if the bond market's telling you they're not likely to get 100 cents on the dollar back. The stock is probably worth zero in that event, and it's nothing more than an option. So credit runs the world. Why? It's a bigger market, and it's a prior claim. And then you look at things that are happening with central banks around the world, and it's a great day to be on your show because of what the Bank of England just did overnight. Right. The Bank of England basically capitulated, okay? And the reason they capitulated is because their bond market was down 40% in the last 90 days, okay? Can you imagine being a bond holder thinking these risk-free assets, you open up your pension statement and it's down 40%?
Yeah, that's the next crisis. So, I want to put this to you, Greg, and
yes, sir.
I was talking about this last year, that a lot of the money that was being made by corporations, a lot of the borrowing, actually, the financial engineering, they go to the corporate bond market.
Yes, sir.
And then they would buy back stock.
Correct.
Which meant they had a leveraged account on their stock.
Attaboy. Yeah.
That they were going to have to roll over at sharply higher rates with the asset depreciating. It's the most toxic cocktail
now, why do they do that,
ever think of.
Why do they do that?
Because
most executives are awarded stock options. They are not awarded options on the price of their debt. Okay. So they are paid implicitly to lever up their balance sheet to enhance the returns on their equity. Earnings per share, everything else being equal, goes up. Therefore, the equity analysts think, oh my God, this company's great. They forget to look at the leverage of the entire system. And as that leverage increases, obviously that system risk increases. So my life has been spent in credit. I started on the sell side, trading with accounts, and then I moved to the hedge fund community. And over a period of 30 years, I've been through 4 financial crises. My career started with the Latin American debt crisis in 1988. Okay. You and I remember it. Here's the funny thing. I worked for the largest bank in Canada, directly for the CFO. And in about 2 hours of studying the balance sheet, I could tell that the Royal Bank of Canada was insolvent. No equity analysts knew this. Everybody in Canada owned the bank because they said, well, it's too big to fail. The government of Canada won't let it fail. Plus, it pays a dividend. Here's the funny thing. Because of its Latin American debt exposure, it was insolvent, which is to say that if you marked to market the price of the price of the defaulted Latin American debt and wrote that loss off against your book value of equity, your book value of equity was negative. Okay. The Royal Bank of Canada, Canada's largest bank, was insolvent. And I went to the CFO, and he's a great guy. I said, Emil, we have a problem. And he said, I know, don't tell anybody. And this was in 1988. And I said, this Fiat Ponzi BS is outrageous. I had just graduated from a business school in the United States and chosen to come back to Canada to work in Canada. You never learn this at a US business school, that banks being 25 times levered, it's a very big risk that if they lose more than 4% on their loans, they're insolvent. Well, the truth is, Latin American debt lost 75 cents on the loan. Okay. And that's why they had to do something called the Brady Plan. You perhaps remember it or not.
I do.
The 4 financial crises I've been through: LDC debt, long-term capital management, the great financial crisis of 2008, and the COVID crisis. I'm going to say that we're in the 5th one right now. Okay. This sovereign debt crisis.
The end game.
I don't know if it's the end, and I don't want it to be, but you better have insurance.
It's too much fun trading these things.
Well, you better have insurance if it is the end game, because ultimately you're going to be holding a bag of worthless fiats, because they're all going to zero, because the only way they can escape the debt spiral that they put themselves into is continue to print money. And that implies that those fiats will eventually be debased into oblivion. Now, the truth is, the US dollar, can I just say one final thing? The US dollar is the best horse at the glue factory. Okay. Very simple.
What sends it to the glue factory? Because, you know, I'm looking at, maybe it doesn't, but, you know, looking at all this action in fiat besides the US dollar, gold's starting to shape up for me. Everyone hates it, Greg.
I love gold right here. I love gold here.
All right. So, I mean, it's almost like when you see this instability in bond markets, which are all underlying their currency value, it makes you say, hey, who needs fiat?
Well, yes and no. Silver. Yes and no. But Dale, you had a great question. Why is the US dollar also a horse at the glue factory? Let me answer that question.
Will it be? Yeah.
Let me answer the question using credit metrics, thinking of the USA like a company. Okay. So the USA collects about $4.8 trillion a year in tax revenues. Okay. Of which 3.6 trillion is for entitlements, Social Security, and 0.8 trillion, 800 billion is for military spending. Okay. You can think of those two, costs as being fixed costs within the US budget. And then your 4.8 trillion, you subtract out 3.6 trillion for entitlements and 800 billion for military spending. You're left with 4.4 trillion. You have a delta or a difference of $400 billion a year to pay your interest expense. Now, the funny thing is, with interest rates at historic lows, which they have
manageable.
been. Yeah. No, it's not manageable. It's only covering it one time, meaning their interest expense is almost equal to $400 billion. That's with an average coupon on the debt of about 1.5%. Well, guess what? The US 10-year just went to close to 4%. So as that debt rolls over, your interest expense increases. And guess what? Your tax revenues are decreasing because capital gains was a meaningful important component of your tax revenues. So your tax revenues are going down, your interest expense is going up. That means you have to print more money to solve the increased interest on your global debt. Your global debt for the US Treasury is right now 125% of gross domestic product. Okay.
Who's going to buy the Fed's QT? In a situation like that, who's going to buy the bonds?
Nobody. Good luck on the QT. They're drinking the Kool-Aid. I think Chairman Powell might be one of the most foolish risk managers I've ever met, because he's a lawyer.
You met him?
No, I've seen him on TV, so I feel like I get to know him. Here's the funny thing. He is a lawyer that is a horrible risk manager because he's never sat in a risk chair. He's never actually seen a crisis unfold. So what happened last night?
Or be the catalyst for one.
Well, he is the catalyst, no question, because the US dollar wrecking ball just destroyed. So the Fed, broke the Bank of England last night. You remember George Soros? When George Soros broke the Bank of
England? Soros low. I was
talking
about that.
There you go. Right. So he broke the Bank of England last night. You can't break all your trading partners because eventually the global economy goes in the sewer. So all of this to say is that's the credit angle on this whole thing. The solution, they have to print money forever. Now, how long can that go on? I don't know. It's gone on for the last 40 years since the gold standard. Okay. Since they went off the gold standard. So it can go for more, but the point is you never know when the music stops. And I've seen we getting closer and closer to the edge of the cliff as these global crises become more severe. So 1988 was bad, but it wasn't as bad as long-term capital, which wasn't as bad as the great financial crisis, which the response by the government in COVID was many times bigger than the financial crisis, even though the financial crisis felt like the world was ending. And guess what? Now the Bank of England just pivoted. They have to go to QT. Why? Because all the pension funds in the UK are underwater so badly that they're all underfunded, and there's going to be a revolt. They're going to have
to be bailed out here in the US too, don't you think,
Greg? I'm with you, sir. So all of this
is why you... this.
Okay, go ahead.
I have a solution.
Yes.
Make me Treasury Secretary for a day. And I'm not even going to wait for the next G20 meeting.
Okay.
Which is October 12th.
Okay.
And I know that, and I've been getting phone calls from Lagarde and from the BOG.
Yes, sir.
BOJ and the BOE.
Yeah.
And they say, you know what? Remember the Plaza Accord, which was done for the inverse reason?
Yeah.
Why don't we get together, since Japan did open Pandora's box and intervene last week?
Yeah.
Why don't we all get together and have a concerted intervention? It's easier for to take a currency down in value than up in value. So to take the US dollar down is an easier proposition than propping up cable and euro.
Okay, right? I love it.
So but then Deist came out from the Treasury and saying there is no need for an accord. That came out today. He must have heard my shows because I've been talking about this.
Well,
isn't that an easy card?
Well, yes, it is.
The Fed to play.
Yes, it is. But everybody debases, which is the melting ice cube analogy that every fiat is debasing. It's just a game of relative melting. So their degree of decay is relative. But what does it mean? You have to own hard assets that aren't going to be debased along with your fiat money. So what are those hard
gold
assets?
Today here, and even the euro's reversing.
Okay, so
today.
What is Bitcoin? What is Bitcoin? Bitcoin is digital gold, or in my opinion, it could be thought of as digital energy. But I'm not here to sell your guys on Bitcoin per se, because it takes hundreds and even thousands of hours of study to understand how beautiful a technology Bitcoin is. But what we are both talking about is the same language of hard assets. Okay. So yes, I like silver. Yes, I like gold. Yes, I like Bitcoin the most of those three things, because I believe Bitcoin to have the most asymmetric upside of those hard assets. And why is that? I'm going to tell your listeners that I have a price target on Bitcoin of $2 million US per Bitcoin. 2 million. Okay. It's trading at 20,000. That's 100 times upside. Okay. Gold does not have 100 times upside from here, and nor does silver, because as the silver price and gold price goes higher, they bring more of it out of the earth. The beautiful thing about Bitcoin is its supply is fixed. There's only 21 million of these Bitcoin forever and ever in the history of the world. Okay.
So what was behind the decline from 65,000 to 20? And could that be that it maybe is much more of a dollar hedge? And that if we get a dollar top.
There's that, but there were other things, so the DXY strength has definitely made weakness in Bitcoin. But if you look in Bitcoin in other currencies, it becomes a lot more. It's in certain cases, but let's talk about what brought it down from 70,000 down to 20,000. The Bitcoin ETF in the US is a cash settled future. So they have a certain amount of the paper gold type of problems with Bitcoin, because paper gold in the same sense is somewhat restricting the price of bullion. There's no question. But here's the beautiful thing about Bitcoin. It's auditable. The blockchain is auditable, so you know where all the supply is, whereas gold, who knows how much actual gold is in Fort Knox, how much is actually forged gold being painted tungsten, etc. I'm not saying I don't like gold. I'm just saying Bitcoin, Bitcoin came down from 70,000 due to a number of things. The Bitcoin ETF, which is cash settled, it's not physical. A couple of digital asset fraud, including something called Luna and Terra, where that caused the whole ecosystem to crash. But if you zoom out longer term on Bitcoin, and I'm going to tell you why I get to $2 million per Bitcoin. Very simply, as a share of
the whole picture,
that's it
since the inception.
Okay. As Bitcoin becomes more ingrained in the global financial system, I believe people will start appreciating it as the ultimate store of value and ability to transfer that store of value anywhere in the world without an intermediary. No banks, no credit cards, no financial intermediary, that you can send value anywhere in the world and it settles in 10 minutes on chain or on something. I'm getting a little technical here. On the Lightning Network, it settles at the speed of light. Okay. It's the most beautiful technology I've ever seen, coupled with a price asymmetry that I've never seen in financial markets in my entire life. That is to say, if it can go to $2 million, 100 times higher than where it is here, you have to own more than zero of that. And I don't think you need to own more than 5%, but I think if you actually own zero, you're taking a huge risk that Bitcoin, if it does attain the price targets I think it can attain, you'll be priced out of the market because fiat will be collapsing on the other side. Don't forget
wheelbarrows of cash like the Weimar Republic.
Okay, so here's why I think it gets to 2 million, Dale. Very simply. We already started talking about global debt as 400 trillion.
Yeah.
Total global financial assets are $900 trillion. Okay. 400 trillion US is debt. 300 trillion is equity. So that's 700 trillion. 100 trillion is global equities. And then another 100 trillion includes gold, commodities. FX is in there, but my number may not mesh with yours, and I don't really care. It doesn't matter. The total amount is 900.
I don't care either, man.
$100 trillion. Okay, here's the funny thing. I believe Bitcoin ultimately one day can get to 5% of that total addressable market in today's dollars. Okay, why? Because I actually think Russia is going to price oil in Bitcoin before long. Russia's done with pricing oil in US dollars, especially since the US dollar freezes their assets on the SWIFT system. So since Bitcoin is digital energy, and I could walk you through all the reasons that I believe Bitcoin to be like digital energy, including the fact that Bitcoin has to be mined using a proof of work algorithm that is backed by computational power, i.e. electricity. Bitcoin has a measure of digital energy in it. So what if Russia starts pricing oil in Bitcoin? Is it crazy to think that Bitcoin could attain a 5% share of $900 trillion? Not, in my opinion, it's not. Okay. So what's 5% of 900 trillion? That's 45 trillion US dollars in today's dollars. There's only 21 million Bitcoin forever and ever. So you divide 45 trillion by 21 million, and what do you get? Over 2 million US per Bitcoin. Okay. And I'm not 100% certain, but let's reverse engineer what the probability the market is giving me that my price target is right. And you're a pretty smart guy. I know you're going to follow this math. You take the current price of 20,000 and you divide it by 2 million, and you come up with a percentage of 1%. The market is basically telling me I have a 1% chance of being right. And I'm like, okay, I'll admit I'm not 100% certain, but I'm way more certain than 1%. Okay. It's probability expected value analysis, dual outcome. One is a price of 0. One is a price of 2 million. It's giving me a 1% chance that the 2 million price in today's dollars comes true. I'm going to take that bet. It's like going to the horse track and watching your pony train, and then no one else is laying the right odds. Okay. And it's like this year's Kentucky Derby. The guy was 82 to 1 odds. Well, guess what? The guy that knew that horse better than anybody probably was the guy buying it, saying, I know it's not 82 to 1, but it should be maybe 25 to 1. So at 82 to 1, I'm a buyer. And guess what? The pony came in. It's the same idea here. It's playing a diversified portfolio of hard assets because of this global fiat Ponzi that is being facilitated by central bank shenanigans. And the guy in the most important risk chair of the world, Jerome Powell, I think he's drunk at the wheel. He's a lawyer who has never sat in a risk chair and managed risk. All right. So all of these things to say, I'm a buyer of Bitcoin. I first got into Bitcoin, full disclosure, at under $1,000 US per Bitcoin.
Okay.
Okay.
I didn't, your explanation of it and that price target sounds astronomical to me, but you know what? I've been watching action here, and 18,000 was a prior high before the breakout.
Yeah.
And we've tested it, and things are getting quiet here, and we're even getting some momentum divergences at new lows. We will not confirm. I know some people are talking 14, but
it's okay.
Don't
what get fancy though. Don't get fancy, because what if you try and buy it at 14 and it never hits that?
Yeah.
And so here's what I would say. Look, your dollar cost
if
average,
you let me finish,
yes, sir.
I was saying really the technical pattern here. I do something I'm known for teaching, 3 drive formations, which is a complete pattern.
Okay.
3 third time's the charm. 3 strikes, you're out.
Okay.
We're the third planet from the sun.
Okay.
The Father, the Son, and the Holy Spirit. 3 is a number of completion, and we only have 2 here.
Okay.
So I was looking for at least one more move to new highs above the highs that we had here.
But can I say, Dale, this is important to understand. The macro Bitcoin was designed for this type of macro scenario. In fact, it was introduced to the world when the chancellor was going to do a second bailout of the UK banks. Okay. And what was called the Genesis block of the Bitcoin blockchain actually quoted the chancellor as a second bailout. And it's anti-fiat. It is insurance on the fiat system imploding. And again, I'm not saying you have to own a lot of it, but you have to own more than 0, in my opinion.
Will it be illegal when the U.S. goes with a CBDC?
No, it'll actually make people understand that digital assets are for real. Blockchain technology is for real. But more importantly, a CBDC is just digital fiat. So there's no supply cap on it. And this is for you guys, you're in the USA, I imagine. Yes.
Yeah.
You guys know this. It's digital fiat with surveillance. Oh, Mr. Dale, you were at a rally supporting the XYZ companies that I don't like. Exactly. Yeah. I'm gonna restrict your ability to go
completely
on
Orwellian.
Exactly, my friend. So this is why you need to understand that.
Well, Trudeau did it in Canada without a digital currency.
Well, he didn't quite succeed, and I was sort of close to that trucker issues. Those trucker. That being said, it was a particularly good use case for Bitcoin. Because the truckers got Bitcoin and he couldn't stop them getting Bitcoin. But I don't want to bring politics into this. I would just say Bitcoin is freedom money. And most Americans I know love freedom. And I believe Bitcoin to be the freest money there is, because nobody controls it. There's no central bank. There is no guy in a chair deciding how to set monetary policy on Bitcoin. It's written in math and code. It's actually, Dale, I'm an engineer. It appeals to me. I'm not sure if you're an engineer, but it's a thing of beauty that I can't say any other way. Well, then you could definitely understand how beautiful a song.
I like the song. I do. I like the melody. And you know what? There's an old Wall Street expression. I want to wrap it with this I am so glad that our paths cross, because I feel, a little kindred spirit stuff happening here. But that old expression, and what they saying about crypto right now? They're calling it the crypto winter.
Except for Bitcoin. There's actually, here's the funny thing. If you look in the New York Times article yesterday, or 2 days ago, they said, and Bitcoin is holding its own against all these other things that are cratering. So who were some of the big buyers of Bitcoin the last couple of days? Oh yeah, the Brits. The Brits were buying it because the sterling was getting shredded. Okay. And the sterling will continue to get shredded because they've just basically opened the door to QE infinity, which is another word of saying infinite money printing to defend their bond market in the UK. So I believe in kindred spirits too, sir. Sorry.
All right. So crypto winter, let's stick with that besides that one article.
Okay.
I'd say that's the prevailing mood of what people are saying about crypto. They'll show Florida, it's a crypto winter, was a big capital. So you know what? There's an old Wall Street expression.
Yes, sir.
Buy straw hats in winter.
Oh, okay. I'm going to write that down. And can I quote you on that?
Yeah, because that's when you get them cheap.
I love you.
And definitely Bitcoin is a straw hat in my view.
Okay.
If you're not real price sensitive, scale in from
Attaboy.
here. And I agree with you, Greg. Really outstanding interview, and you're a real high energy, passionate guy. And you know what happens to a guy that sits with me for 30 minutes on camera?
What's that, my friend?
You become my trading warrior brother.
I love you. I have been in the pits. I've seen it all.
Yeah,
okay.
Yeah.
That's the difference. You and I have seen a lot of stuff that Jerome Powell has no clue how it works. Okay. He's an academic and a lawyer who doesn't understand how the plumbing of the global financial system works and how easy it is to break that plumbing. So I noticed at the bottom of your screen, it's only 7:02 a.m. your time. Where are you on the West Coast?
I'm on the West Coast, unfortunately.
All right, that's all good, man. I'm in Canada, but I'm a huge fan of the United States. As you guys know, I went to school. Maybe you don't know this. I went to school at Cornell. I love the USA. USA is a bastion of freedom. Okay, USA. The best thing that could ever happen to the USA is they could adopt Bitcoin as their reserve asset, and it would support the US dollar hegemony, okay? And you'd have the US dollar fiat as your checking account and Bitcoin as your savings account. And guess what? The US takes Japan and everybody takes it, China most importantly, and they control their own destiny. This will happen. There's a lot of people that are smart enough to see this. I just hope Jerome Powell doesn't blow it up before we make that progress. So such a pleasure to be on your show.
Greg Foss for Fed chairman in the US.
I would never take that job.
Please,
never.
Greg.
No, sir.
I'm begging you.
Okay, well, listen, I'd love, there's enough people that are way smarter than me that know the same solution. But first of all, I've spent my career in financial markets, 35 years to be exact. I'm looking to do different stuff, including educating most of the people for free. And going back to that lookingglasseducation.com, please understand it's for our children. We need to do this, Dale.
We do.
Fat old white guys like you and me, we've done it. Okay. We need to take care of our children because we are so greedy and so soft that we won't even pay our own bills. And we're pulling forward gains for our own personal benefit at the expense of our children. It is disgraceful. I'm going to say that out loud. Fat old white guys, and that's me. I'm fat, I'm old, I'm white. We are to blame for the fiat system that we are currently experiencing, the destruction of values and everything. So Bitcoin is freedom, free financial advice at Looking Glass Education. And to sum it up, I'm still a trader. What do you think I do in my day, quote unquote, job? I trade for my personal account. But
you ever been to a retirement dinner for a trader?
I have actually.
Oh, wow. I've never heard of one before. But
oh, really? No, they're actually pretty fun. But the truth is, it's when they retire from their formal job on the street, but then they go home and they do it. They do it for their own self on their personal account.
It's like being in the mafia. You can't leave.
It's in your blood. It's in your blood.
Hotel California, buddy.
There you go. There you go. So anyway, thank you once again.
Thank you, Greg.
I'd love to stay in touch. Please reach out. Okay, my friend.
And I'll drop this video off for you because I think it needs people to see what you had said today. So
looking forward to it. Thanks for your help.
Oh, okay. Thank you, everyone. Greg Foss, follow him. At Greg Foss, or is it Foss?
It's Foss, FOSS, GREG, FOSS on Twitter.
Okay, Greg.
Thank you, my friend.
Thank you so much, man. Adios. Hope everyone enjoyed. See you tomorrow, Michael.